Good evening, everyone. Welcome, welcome. Welcome to this evening's class. I see everyone's coming in slowly but surely, but I don't want to keep all of you guys waiting. I see people are now starting to pour in. Welcome, welcome. Okay, I'm happy to see that you guys are coming in. All right, so this evening we're doing how to use the RSI and wave patterns for entries. Okay, so basically we're going to look at wave patterns and we're going to look at how we bring the RSI together with the wave patterns. Now, I'm going to keep it simple this evening. Can everyone see my screen? If you can see my screen, give me a yes in the chat box. Wonderful, wonderful. All right. So someone just give me an instrument, any instrument. Just give me an instrument and we'll work with that one. Okay, Euro USD, that's the first one that came in. I'm already on Euro USD. So let's start here. Okay. All right. So we're on the Euro dollar, US dollar. Someone give me a date. Just give me a date and I'll go back to that date and we'll work from that date on Euro USD. It could be a date from this month, like last month, doesn't matter. Just say a number. All right, I see people are pouring in. That's good. So someone give me a date. Okay, is that January 1st? Right, Ken? That's January 1st, right? Okay, wonderful. So let's go. January 1st. That's far, but we'll go. Okay, I think we can do it from here, right? January 1st. And boom, right there. Let me try to find where the data is on this chart. Where is it? Oops, I'm not finding the data. Okay, I think I found it now. All right, got it. And you said January 1st. So all the way up here, okay. January 1st. All right, I think we found it. Here we are. Okay. So our data actually starts on January 3rd. Okay, so here we are. We're January 3rd. Sorry, we don't have January 1st. So we're going to use January 3rd. So here's where we're starting. All right. So this is what we're going to look at. Let's bring the chart over here like this. Right. So this is December 31st, and we're going into January. Okay. Since you want us to look at January 1st, we're going to go into January. So this is what our price data would look like on December 31st. So look at the price. We have a very strong move down. Okay. Now, if you understand price patterns, then we could be looking at something at this point, which I would look at and say that this is my impulse, and I'll expect this impulse to repeat itself over here. And this would be my corrective impulsive wave, because we're looking at this type of setup here, and this looks like a B wave, right? So this is just a bigger corrective formation. So then I would draw this in looking something like this, right? Could start from here. I'd say this is my W, This is my X, potential X here. And this is potentially going to be where my Y is expected to complete. And after my Y is complete, I will expect this wave to come back, right? So that's what I'm looking at if I'm looking at this from a wave patterns perspective, right? I'll expect that wave to come back around that level. Okay, so I put that in. I'm not sure what's over there. They don't have a chance to really even look at this properly to realize if this is going to be going up or down. Okay, so let's see how this is going to play out. We have an impulse coming down. If this is going to be the wave structure that we're looking for, which is WXY, you can see this is a corrective structure. You can see this is an aggressive wave down. You can see this is also an aggressive wave down. So we're going to expect one more wave to the upside to complete this as a 1, 2, and 3 wave pattern to the upside. Okay, it is still looking like a corrective formation. So I look at my RSI. I have my aggressive wave down from here, right? So if I'm just gonna put in a little arrow from there, my RSI is telling me that's where my wave down started, right? So it started here, we got a correction and continued coming down, right? So this is my aggressive wave. So you can see this is the impulse, came down into this area here. Now with the RSI between 10 and 30, this is where you're looking at what a lot of traders like to call oversold, right? So this is what I look at as oversold. I don't call it oversold. I call it my RSI extreme, okay? So this is just my RSI extreme bottom, right? This is the low of my RSI. So I look at that as my extreme low. This is my extreme high on the RSI. The extreme high on the RSI is from 90 to 70. Okay, it looks like I erased one of my lines here. Let me just try to put it back. So I'm looking at 70. All right, so right around here should be 70. Okay, so we're looking at from 90 to 70 as my extreme high on the RSI. And as I said, many of you would refer to this. Many of you would refer to this as your overbought condition, right? I see we have many of you guys here tonight. Welcome, welcome everyone. Happy to see so many of you here. So we would look at this as our overbought condition. So whenever the price comes into this overbought condition, we want to look at the price to see what the price is doing at that point. Okay? What is the price doing at the time that it goes into overbought? Now, if you look at this corrective structure, this is very, very complex, right? So you will see price make one, you get 1, 2, 3, completes. It is in this overbought condition, and you will see the price come down. Yes, it did come down back to the oversold condition or the lower extremes. Okay, from there it pushes up again back into the upper extremes on the RSI. And that's how the price is moving, as you can see here. That's how it's moving. Now, my RSI setting, what period am I using on the RSI? I'm using a period of 2. Now, I know many of you may have never seen someone use the RSI with a period of 2, but that's how I use the RSI. One of the reasons why I use the RSI with a period of 2 is because I realize that the RSI is not a lagging indicator. The RSI is actually a leading indicator, which means it is slightly ahead of price. So the RSI comes with predictive power. Okay, so keep that in mind. The RSI comes with predictive power, and the ability to predict what price is going to do gives you an edge. Okay, Good. So we use the RSI with a period of 2, and our upper extremes on the RSI, we look at 90 to 70 as our upper extremes, also known as overbought conditions. Our lower extremes, we look at that as from 10 to 30, and that is oversold conditions, okay? The 50 line on the RSI, that is the center. We also look at the center, right? Because the center line on the RSI could also mean that a corrective formation is over, right? So if price is below on the RSI, below 50, it means that we still have potential to continue going down. If price came from the lower extreme to the higher extreme, from the higher extreme back down to 50 and stays above 50, we still have the potential to continue moving up. Okay? Look, here's a condition right here. It's from the lower extreme to the upper extremes down to 50. And as you can see here, it bounces off and continues moving up, right? So that is basically how the RSI works. Now, let us see how this piece of price action is going to play out. So what I'm expecting is to complete this wave structure. Now, wave structures are complex. We can have very complex wave structures, which means this one could extend to the downside. It is possible, right? But it doesn't matter if it does that and continues moving down, that's not a problem. We will still have an impulse wave to the downside, which is a corrective impulsive wave, part of a correction, right? So let's see how this one plays out. What I'm expecting is correction to the upside. So let's see. And we're getting correction to the upside. Now, as you can see, the price comes and it comes back into the upper extremes on the RSI. Now, a lot of us think that because the price comes back into the upper extremes on the RSI, it means that we should sell. That is incorrect. Now, look at something else here. Let's look at, let's bring on Fibonacci. I know a lot of you guys may be using Fibonacci, right? Let me just make sure I catch the high properly. And this is the low, right? So this is Fibonacci. Now, a lot of us believe that once the price comes to a low and it bounces to these fib levels, that the price is just going to go down. That is also incorrect, okay? These fib levels work how you think they work. However, they work within wave pattern construction. So we need to understand the wave patterns because the price does not move in a straight line. The price moves in patterns. So if you understand the wave patterns, you will understand how Fibonacci actually works, right? So here we have the fibs on as well. We have the price push up. It hit the, I think this is the 38.2 level. So it hits the 38.2 level. And it also goes up into the upper extremes on the RSI. So this first push up is going to be our first wave of a 3-wave correction. That's what we're going to look at. We're always going to look at price as moving in 5 waves and 3 waves, okay? That is just the base that we're going to look at price from. 5 waves and 3 waves. Corrections, 3 waves. Impulse waves, we're going to look at that as potentially 5 waves, unless we have a big impulse that is 3 waves, and that is called a corrective impulse. Okay, so here we have price pushing up. Is it pushing up in 3 waves? No, I would not say that it's pushing up in 3 waves. It is pushing up a bit aggressive, which means it's moving a bit straight. Now, a 3-wave formation does not necessarily move in a straight line. Okay, now this is not exactly a straight line, but it's very upright, it's very straight, it's very aggressive, right? So this is an aggressive wave. So I would look at this as a corrective impulsive wave of a 3-wave correction. So this is just wave 1. I need 3 waves. So I need a push up, I need a correction, then I need another push up. And that will complete a 3-wave formation. So here we go. Looking for a correction now, okay? A correction, it either goes flat or it goes down. So let's see. We went flat. As you can see here, we went flat right in this area. You can see that. We went flat. And look where the RSI went. The RSI went a bit past the 50 level, bounced off the 50 level back to the upside. Now, how do we outline this piece of price action? Let me just take off the fib. Right, I'll take off the fib for now. A bit much information over there. So let's put on a line, right? So let's look at this. If we look at this as the high, and we put in another line here because some of you guys may be aware of flat pattern formations. So if we know the patterns, you can see here that this is an aggressive move up. We got a flat in here. And when a flat pattern completes, we're going to look for another aggressive move up, right? So here you go. We have another move pushing up and it's bouncing off this 50 level on the RSI, okay? With it bouncing off this 50 level on the RSI, and with us knowing that this is a flat formation, we can go for one more move up. And if we're going for one more move up, we can come and use market geometry. I have gone through market geometry with many of you guys. So here you go. We use market geometry to give us an idea of the potential distance the price can go. All right. Now, we know we're expecting this wave, but we may not get that entire wave in one day. Okay. These waves don't come in one day. Every time. Sometimes they do, but most times they don't. You get a piece today, you get a piece tomorrow, you get a piece another day. That is just how it works. Okay. I prefer to trade wave by wave, which makes me a day trader. Okay. Now, if you look at the times on this, this is Eastern Standard Time. Okay. So this is approximately, let's say around, so we start going up from around 2 o'clock, right? So we have from 2 o'clock and then we have until 12. Now, as a day trader, we need to understand that the market is most volatile from, okay, someone said I can't hear you. Okay, my mic is on. So Marshall, please check your sound. Can anyone else hear me? Okay, so everyone else can hear me. The sound is fine. So Marshall, I think the issue is on your side. Let me just see if I can respond to Marshall. Okay. So the sound is good for everyone else. It's just Marshall. I think Marshall has an issue with the computers or the speaker. Okay. So, all right. So back to it. So as you can see here, this is around 12, which is 1900 hours, right? So that's 12 p.m. Eastern Standard. And generally, the market slows down at 12 p.m. Eastern Standard. Now, all that depends on the instrument that you're trading. Now, I'm talking from a London session to US session, okay? These are the sessions that I trade, all right? So from the London session to the US session, the market tends to slow down at 12 p.m. Eastern Standard, and generally around that time, there isn't much to get out of the market, so it's best you just pack up and go home. Okay, so as you can see here on the chart, at around 1900 hours or so, things die off, And as you can see, we're going and going, and things start to pick up again closer to the beginning of the European session, right? So from around 2 a.m., volatility comes into the market again, the price starts to go up. So if you guys were at, I think one of the first classes that I did when I spoke of sniper entries, this is what I was talking about, okay? The times of the day that you choose to get into the market are very, very important, okay? So there are many elements to the market. The more you know, the better a trader you will be, all right? So here we go. We're moving back to the upside. We're looking for this length. We're looking for this wave. We may not get all in one day. So here you can see from the start of the European session, the price starts to go up. And let us see. Where are we? All right, so the price starts to go up. We almost made that measured move. Almost, we came close to it. This wave down was a bit short as well, and we came close to this measured move, right? So we hit this top again. So we came back, we hit this top. Now, with us coming back and hitting this top, this tells us that we may potentially have another flat pattern going on here, right? So we came back, we hit this top, we didn't quite make this measurement. Now, if we look at this as a complete wave to the upside, this would be, let's put in this drawing here. This would be 1, this would be 2, and this would be 3. Let's change the color. Let's use a different color. Okay, let's see, this should work. Right, so this would be 1, 2, 3. And this wave down is what we would expect next. Okay, so let's just outline this wave. Right, so we'd expect this wave down next if this is the current wave that we're looking at. If this wave is completed here, we're looking for the next wave. Okay, so we always look to the left and we reconstruct because the market is fractal. Okay, and that's how we construct pattern formations. They're just fractals repeating themselves over and over again to form price action. Okay, so we're now looking for the price to come down if this wave is completed in this area. How do we know that this wave is potentially done in this area? Again, I look at time. So you can see here that it's around 5 a.m. to around 5 to 7 a.m. and the market starts to die off. Then we have 8 a.m. to 9 a.m. This is the start of the US session. And at the start of the US session, the market hits a top, right? So it hits a top. For those of you who like support and resistance, you can look at this as support and resistance, okay? We would look at this and say that this is potentially a truncated wave, which is a short wave, okay? So if this is a truncated wave, which means it stopped short without going above the previous high, so this would be our truncated wave, and we could start moving to the downside, right? So the time is important. The market shifts at the market open time, the lunch time, and the market close time, okay, based on the instrument that you're trading, right? So if this is going to be the start of the US session and the price starts to push down, we get some red candles here, the price is pushing down aggressively, then there is a possibility, since we hit this high, that the price is looking to reverse and give us the next wave. So if now we are looking to go down, what wave are we expecting? Look at the RSI as well, okay? The RSI is in the upper extreme. So we have the RSI in the upper extreme. We also hit this area of resistance. We know that this is the wave that we were expecting to the upside. Because we understand the pattern formations, we know that this is potentially a truncated wave. So at any point, this wave could start moving to the downside. We also take into consideration the session time, which is around 8, 9 o'clock or so. That's the beginning of the US session. And we start seeing signals that the price wants to go down. So at that point, we're looking to go short. We also have the RSI in the extreme. So with us having the RSI in the extreme, as you can see right here, with us having the RSI in the extreme, with us hitting this area of resistance, with us potentially having a complete three-wave formation, with the last wave being a truncated wave, we can look to go short because we have the session open, giving us some red candles as well. So that's hinting to us that price wants to go in the opposite direction. So we go in the opposite direction. We put our stop above this area, right? And the price starts to go down. So the price starts to go down. We're making some profit. The price reaches the lower extreme on the RSI. Here you can see that the price is in the lower extreme on the RSI, right in this area right here. So since this is impulse down, strong move, what do we expect? We have to look for a correction because that is just the way the price moves. Let us also check the time. The time here is, let us see, it is 12 p.m. Eastern Standard. And what do we do at 12 p.m. Eastern Standard? Someone tell me in the chat box. What do we do at 12 p.m. Eastern Standard? Exit. I think that's Gary. Gary said exit. Mark said get out. Jonathan said pack up. Okay, wonderful, wonderful. Yes, so that's what we do. We pack up, we get out, we exit, we get out of the market. Okay, so we get out, we go home, we allow the price to do its thing overnight, and we come back around 2 a.m. Eastern Standard. Okay, so let's see how the price rolls, right? So let's see if we get to 2 a.m. Eastern Standard. Let's see here. Okay, looking for 2 a.m. Okay, looking for 2 a.m. All right, so here we have 2 a.m. right? So we have 2 a.m. right around this area. Now, I know a lot of traders are thinking when they look at the chart, they're thinking, but look at all of this. I could have caught all of that. Sometimes it's good to just let the price tell you what it wants to do next. You can't try to catch every single move that the price makes because the market moves impulse, correction. The corrections can take on many formations. So it does not mean that because you saw the price go up in this scenario, it means that all corrections are going to go up. Some corrections just stay flat, okay? Because there are many different corrective formations. So it's good to try to stay out of the B waves of corrective formations when they're small. If it's a big wave, then yeah, you can trade the impulsive corrective wave inside of that big B wave, but you don't want to be trading the B wave of small waves or the X wave of small waves because you don't have much movement to catch. Okay, you want to trade a wave that has a decent distance. You want to make at least maybe 50 pips or so as a day trader. Okay, so here this wave went up overnight, and around 2 a.m. or so, you're looking to get back in the market, right? Around 2 a.m. At 2 a.m., what do we have? Do we have a complete correction? No, we don't. We don't have a complete correction. So with us having only one wave up, what does this tell us? It tells us that we need to get a correction down, and we did get that correction. by around 2 a.m. or so, we're seeing that we're getting a correction. It looks like 3 waves, 1, 2, 3. So that is 1 wave up, 1, 2, 3. So we'll expect 1 more wave up, right? So we're going to look for something like this. Something like this to repeat itself over here like that, right? And let's see. We got that. And we got that wave almost to the pip, right? Or maybe exactly to the pip. Okay. So we got that wave. So now we have a complete 3-wave correction. And where is the RSI at that time? The RSI is in the extremes. It is between 90 and 70. In that area, the RSI is telling us that we are in the overbought conditions. According to most of you, it's in the overbought conditions, which means that buyers are exhausted and looking to get out, while sellers are looking to come into the market. Okay? Now, what time is this? If we pay attention to the time, it is between 5 and 6 a.m. What time is between 5 and 6 a.m. Eastern Standard in the European session? Tell me, someone, what time is that in the European session, London session? What time is that? I see Gary says lunch. Ryan says 10 a.m. It is actually lunchtime, right? So it's lunchtime. And what do you do at lunchtime? You have lunch. Well, most of us do. I don't, but most of us do. We have lunch and we move out of the market. Well, institutional traders, they get out, right? So they get out of the market. So if they were buying, they're going to get out. So the market is most likely going to go down. If they were selling, they're going to get out. So most likely the market's going to go up, right? So at lunchtime, the buyers are coming out of the market. And so if we had majority of sellers over here on this big impulse, and now we have buyers going against these sellers, and the buyers are now coming out at lunchtime, what's going to happen? The sellers are going to regain control of the market. And with the sellers regaining control of the market at that time, which is lunchtime, we will start seeing the price come down. So we will start looking for the rest of this move. We need this, look at this length, and we project it over here, right? So we will look for the rest of that move to the downside. Why? Because we're expecting at least 1, 2, 3. And that is what makes a complete wave. At least 3 waves or 5 waves is a complete wave. So we need to understand the market moves in 3 waves, the market moves in 5 waves. 3 waves is a complete wave, 5 waves is a complete wave. After a 5-wave formation, you look for a 3-wave correction. Based on if the market is corrective, you look for a 3-wave move, then you look for another 3-wave correction. Okay, so you can move 3, 3, or 5, 3. Okay, so now we're expecting a move down. Let us see how this one plays out. This could be a complex corrective formation. Okay, so being a 3-wave formation does not necessarily mean that it is going to be just 3 waves and that's it. It could be 3, 3, 5. Remember, flat patterns. Remember, we have diagonal formations. Remember, we have triangles. We have many different formations that are corrections. And whenever you look at a correction, they can evolve because there are many variations of these patterns. Now, let us see here. We're moving down from lunchtime. And we move down, we create this wave here. right? So you can see that we made this wave down, and then the price just starts to move up. Now, this aggressive wave to the downside that we see here, this is a wave that could be a truncated wave, which means this, it could mean this 1, 2, 3. It could mean that. This could be our pattern here. Let me change the color. I'll use green, right? So it could mean that this is our 1, 2, 3 wave. And we could look at this and say this is A, B, C, right? So we don't have to label this W, X, Y. We can label this correctly by labeling it A, B, C, right? So this could be A, B, C like that. And let's change the color. All right, so we don't get too confused. Good. So this could be ABC. What time is this wave completing itself? What time? It is 8, 9. So between 8 and 9 o'clock, we get a green candle. What does that mean? So can someone tell me what it means to get a green candle against a down move between 8 and 9 o'clock? That is what time? What time is 8 and 9 o'clock a.m. Eastern Standard? What happens at that time? I see. Jonathan said, pack up, close. But it's actually the open of the US session, right? Gary says, US Open. That is correct. 8 and 9 o'clock is the US Open. So this is how important the session times are. So the session times play a big role in price action. Now, I bet a lot of you did not know that. So pay attention to your session start, pay attention to your session lunchtime, pay attention to your session close time. These times are very, very important. Okay? Look at your RSI. The RSI at this time is in the lower extreme. So it's in the lower extreme. We get a green candle at 9 a.m. Eastern Standard. That is telling us that the price is potentially looking to go back to the upside. And if it's potentially looking to go back to the upside, it could simply mean that this wave that we're looking for became truncated. And most of you are familiar with truncated waves, right? So if this wave became truncated to the downside, it would mean that we are potentially extending to the upside. So this wave up, which did not make this full measurement, is still going up, right? So we're going to come back, measure this wave, and we're going to project this wave over here like that. So now we're going to look for this measurement to the upside. So we're either going to make a repeat of this measurement, or we're going to just reach to this level and stop. Okay? Now, remember, all of that does not have to happen in one day. So let's see how price moves. We have the RSI in oversold condition. It's in the extremes between 10 and 30. We have a green candle at 9 a.m. Eastern Standard, which is the US session open. And the price starts to move to the upside. If we're in this buy position, we can see that price is moving up. And what time is this? This is 12 and 1 o'clock. What happens at 12 and 1 p.m. Eastern Standard? Can someone tell me that? That is lunchtime. Yes, that is lunchtime. What other time is that? That is also, well, I'll tell you guys, that is around the time that the European session closes. So we have lunchtime and we have the close of the European session around the same time, right? So that means that European traders are coming out of the market, US traders are going to lunch, some of them are not going to return, right? Maybe in some cases, most of them are not going to return, right? So we will expect the market to go slow at this time, right? I see Grace says yes and close, so lots of sellers. Does not necessarily mean lots of sellers, right? But it means that the market will slow down at that time. Okay, so the market's going to slow down at that time. So let's see what happens here. Is it really going to slow down? Let's see. Look at that. Look at that. The market slows down, goes into correction, right? So it goes into correction. And remember, we're looking for a bigger wave to the upside, right? We're looking for this wave to repeat itself over here. So it goes into correction. And let's see, this is the end of the US session here. It goes into the Asian session. And we get a little spike up here. You get a little spike up, a little push down. And if we look at this, we can say this is potentially maybe some sort of 1, 2, 3. This is a bigger correction, right? But we're not going to be in this, right? This is all happening and we're just looking at the chart the next day, right? So all of this is happening without us. We're looking to get back into the market around 2 a.m. Eastern Standard. So we're looking for 2 a.m. Okay, so by 2 a.m., they make a complete wave. So we did not get any of this move to the upside. They did that overnight. Okay, with them making this move overnight, and look at it. Look, I'm trying to show you, but the icon is blocking. But if you look at the chart, it made the distance to the pip. The exact length of the wave was made. You guys can see that, right? And what time is this that the exact length of the wave was made? It was made at exactly 2 a.m. Eastern Standard, and the price stopped, and we can see that we have a red candle. What does this red candle mean? This red candle means that we are potentially looking to make a move to the downside. And since this wave up came in 1, 2, 3 parts, I'm going to adjust this. Oops, not this one. This one is going to go over here, right? Fix this one. Good. And this wave, which is this one, is going to come back over here, right? So that's what we're going to look for next. And let's see if that unfolds. 2 a.m., we're in overbought conditions on the RSI. You can see that, right? We're in the extreme high on the RSI. And look what's happening here. We're going into some sort of consolidation, some sort of corrective, some sort of chop. And look what's happening. Before I even show you all of that, let's see here. Look, we have 5 and 6, right? So we have 5 and 6. So between 5 and 6, which is lunchtime in the European session, that's where the price starts to come down, right? So within 5 and 6 o'clock, that's when the price starts to come down. So you're looking for your entry at around 2 to 3 a.m. If you don't get it at that time, you get stopped out. You're looking for your entry again at around 5 to 6 a.m. So here you go, 5, 6 a.m., price starts to move down. And you can see that you're getting that wave down. Let us also check the time. Okay, let's see here. We're looking at 8, 9. So 8, 9, the price is still coming down. That's good. Good. We have a green candle here. That green candle is at 11 to 12. Right? So this green candle will close at 12 o'clock. What time is that? Lunchtime. That green candle closes at 12 o'clock. It is lunchtime, as you can see here. And what happens at lunchtime? Traders go home or they go to lunch. That's lunchtime in the US session. So lunchtime in the US session, where are we on the RSI? We're in the lower extremes on the RSI. So with us being in the lower extremes in the RSI at lunchtime, which is 12 to 1 p.m. Eastern Standard, we are going to exit our trade, provided that we have some sort of confirmation, which is in this case, a green candle going against the aggressive move to the downside. At that time, we want to get out of the market because we're not going to expect much volatility. Okay? And this is without us even looking at the economic calendar. I'm not going to bring the economic calendar into this right now. Okay? So we're out of the market. Let's see what happens. I'm expecting the market to go slow. I'm expecting it to go dead. So let's see. It starts to push up. So we did get some volatility coming into the market at 12 to 1 p.m. Eastern Standard. Now, if we're out of the market, we're okay. If we saw that maybe there was a high impact news event coming out sometime after 12 p.m. Eastern Standard, then we could have gone long, because we're already seeing that at around lunchtime, the market is looking to go to the upside, and we have a high impact news event coming out at sometime after 12 p.m. Eastern Standard. So the market could be pricing in that news event, right? So this is most likely what took place at that time. They priced in that news event to the upside, but we would have been out of the trade. This would not have affected us because we exited at 12 p.m. Eastern Standard. So this candle is from 11 to 12. So at 12, we are out. Okay. Price goes up. This is the first wave of potentially a correction. And let us watch the time on this, because we're out from this level. And let us see here. We're looking for 2 a.m. So we're not going to get back into this. We're looking for 2 a.m. So here we have 2 a.m. right on this red candle right here. We have 2 a.m. With us having 2 a.m. at that area, this is where we want to go short, right? We want to go short because we have a red candle at 2 a.m. Price pushed up. We are in the upper extreme at this level, and price starts to come down. At 2 a.m., as you can see, it is telling us that we are potentially still looking for downside, because this green candle pushed up to the 50 level on the RSI, and it's rejecting with the red one, which is coming in at 2 a.m. Right? So the 2 to 3 a.m. candle closed red. We have a rejection on the 50 level of the RSI. This is telling us that price potentially wants to go down. We are going to enter short, okay, on the close of this red candle. We go short, price comes back to the downside. With price coming back to the downside from 2 a.m., what's the next time that we're looking at to decide if we're going to exit? Can someone tell me? What is the next time that we're looking at for a potential exit? All right, I see 5 a.m., 6 a.m., 5 to 6 a.m., all correct. We're looking at between 5 to 6 a.m. as our next exit because we entered the market at 2 to 3 a.m. So we're looking at lunchtime because lunchtime is where traders are going to go to lunch. They're going to take a break, right? So that's the area that we're going to be looking to get out of the market. So we also have to look at pattern construction. So if this is our low, if this here is our low, right? So this is our low. Let me just try to put this in best I can, right? Good. So if that is our low right there, and we're looking to exit the market at between 5 and 6 a.m. Let's see. This is 5. We broke through. We're still red. This is 6. We're green. So we have a green candle at 6 a.m. We broke through the low. What are we going to do? We are in the lower extremes on the RSI, which is oversold. We are going to exit the trade. So at that time, we exit the trade. For those of you who are support and resistance traders, some of you may want to look at this area and say that this is a support area and you may want to exit at this level. For those of us who are wave traders, we may look at this and see this bottom here and we may want to exit this trade. Okay, so some of us may exit at that level whilst others may want to wait for the 5 or 6 a.m. candle to be an opposite candle, and that could give us a hint that traders are looking to get out of the market because you're selling, and between 5 and 6 you get a green candle. So that's going to be giving us a hint that we have a shift of momentum. Okay, so we got that green candle, and as you can see, price just dies off. Right? It dies off. And with the price dying off, we're still looking for the downside, right? We're still looking for downside. This wave is extremely sharp. This wave is extremely sharp. This wave down is also extremely sharp. So this could start to get very complicated, right? So because it could start to get very complicated, what I'm going to look for is a pattern that looks something more like this. So we have an aggressive wave down, we have an aggressive wave up, we have an aggressive wave down. I'm going to look for maybe a correction like that, another aggressive wave down, another aggressive wave up, and another aggressive wave down like that. All right? So that is potentially what I'm going to look for because I understand pattern construction, right? So with me understanding pattern construction, I'm going to look for something that looks like that because I can already see that I'm getting this weak wave. So this is the weak wave here, right? I'm already seeing that. So let's see. Oops, that is good. Weak wave, strong wave. All right, as you can see, I got the weak wave, I'm getting the strong wave down. Let us see when the strong wave down started. This was from 12. Okay, sorry, this was 5 to 6 a.m. So at that time, I'm out of the market. And usually if I get an impulse, like if I get a strong wave like this, I'm out for the day. I'm out for the entire day. After I took this impulse, I'm done. Because impulse correction, right? I'm not going to try to trade the corrective side of the market because I am only looking for the impulse of the day, right? So I would have been done in this area here. If I decided to stay in the market, you can see here that I would have until between 8 and 9. And we have 8, 9. It tells me it wants to go down. If I sold, my stop goes above here. It does go down, right? So my next exit will be 12 p.m. between 12 and 1 p.m. Eastern Standard. As you can see here, it goes down, but it goes into correction first. So I would have taken on a small loss if I exited around 12 or 1 p.m., right? But as I said, if it's an impulse wave and I'm able to catch it, I am not getting back into the market because I'm going to know that after an impulse comes a correction. I do not want to be caught in the choppy cycle of the market. Okay? I already know that what I can expect is a pattern that looks like this. So we got a weak wave, we got a strong wave. Let us see here. So after 12, we're out. We're looking for the next time I'm going to get into the market, 2 a.m. So here you go. This is 1, this is 2, and price starts to go down at 2 a.m. as you can see here, right? So you see what time the price moves. The price starts to move aggressively at 2 a.m., goes down. Look at this. This is 4, this is 5. So at 5, you can see here the price is already slowing down at around 5 to 6 a.m., right? So I'm out of the market in this area. Definitely I'm out. Okay, I'm out of the market here. At that time, if I decide that I'm going to get back into the market because I expected this wave, this wave, this wave, I'm looking for the next up wave. So if I'm looking for this wave, which is actually this one over here, I'm looking for that wave to come back over here, right? So I'm looking for that wave. And as you can see, that wave came. And then I'll be looking for this one, right? Which is this one. And you can see that wave came, right? And it came even longer and extended to the downside, right? So the pattern became extended to the downside and price just continued moving down, creating an even more complex pattern formation. All right. So if you guys have any questions, please go ahead, drop your questions in the chat box. I'll be more than happy to answer any questions that you may have. We have reached our 1 hour for the evening. I don't want to make the class too long. So go ahead, drop your questions. I'll be more than happy to answer any questions that you may have. Any questions, guys? No questions? I see Mark says, wow. Wonderful, wonderful. Anyone else? Any questions? Feel free, go ahead with your questions. Grace says, wow as well. Dana says, thank you. You're most welcome, Dana. Anyone else? No questions? Okay, Grace says, okay, another Grace. We have 2 Graces here tonight. Okay, so Grace says, do we basically take the 3-wave move and then look to the left? Okay, my advice is trade for the bigger wave. Okay, so you trade for the bigger wave. You try to stay out of the smaller waves and you try to stay with the bigger wave. Okay, so for example, if we're looking for this move up, this would be one of the bigger waves, right? So I would look for this wave. And since we got 1, 2, 3, and then we got a move up, I'm looking for this wave length again. So that is a big wave. I will look for that big wave, right? So these internal waves, this one is big, this one is big. Well, it was expected to be big, but I would not go for these inside here. These inside here would be more like a scalp, but because corrective formations could take on so many different patterns, they're not always very easy to predict, right? They're not always very easy to predict, so you got to be very careful with them. So I only go for the big ones. And when I say big, I'm talking about around maybe 50 pips or so, 45 pips to 50 pips, right? So try to stay with the bigger impulsive side of the wave and stay out of the smaller corrective side of the wave. Let's see here. L Grace. So we have Grace and we have L Grace, right? So L Grace says, good training and info. You're most welcome. Okay. If I pronounce this name correct, I think it's Adi Selm. Adi Salim. Okay, Adi Salim. I think I got it right. Okay, Adi Salim said, when do you get in and out? How do you identify the bigger wave? Okay. When do I get in and out? If I look at my chart and my chart looks like this, right? I'm not in the market yet, but my chart looks like this. So I'm looking at the time. First of all, I'm looking at the time and I'm looking at the RSI. So this is, I'm looking to enter the market around 2 a.m. Eastern Standard, right? So this is 2 over here, it went down, and this over here is between 8 and 9, right? So between 8 and 9, around that time, I'm also looking to get into the market, right? So if I bought this over here, which is around 5, 6 a.m. Eastern Standard, I'm looking to exit around 8, 9 or midday, right? So in this area over here, this is coming to around midday. So around this time, I'm out of the market. I'm not looking to sell or anything at midday, all right? So I'm looking for my next entry, which is going to be around 2 a.m. Eastern Standard, right? So I'm looking for 2 a.m. Eastern Standard. Okay, so this is around 2 a.m. Eastern Standard. So right around this area here is 2 a.m. Eastern Standard. If this is my impulse, right? So this is my strong move down, and this is going to be my correction. So my 2 a.m. candle is coming inside of my correction, right? So we have the impulse, we have the correction, we have price coming back into the upper extremes on the RSI. We have 2 a.m. I'm expecting this impulse to continue down, right? So I'm looking for the sell trade. So when I get this red candle, that's telling me that we can potentially move down. And I got that red candle at around 4 a.m. Eastern Standard, right? So that red candle came in around, well, at 3 to 4 a.m. Eastern Standard. Actually, no, it's actually from 4 to 5 a.m. Eastern Standard. So that is telling me that I can go short because we did hit the upper extremes on the RSI and it was a correction. So I can look to join this aggressive selling move and go down. And I'm looking for this length, right, to the downside. And I'm trading based on the RSI and I'm trading based on time. So that's where I took my entry. I'm entering trades at my session open, at my session lunchtime, and my session close. Since we're trading pairs, we're also looking at the next session, open, break time, close times. Okay, these are the times that we're looking at. My next exit, I'm looking for, since I'm entering at around 4 to 5, so around 5 o'clock, I'm entering. My exit, I'm looking at, if I have a candle at around 5 o'clock, that's a green candle. I'm going to exit because I'm looking to sell. So if I get a green candle at 5, between 5 and 6, I'm going to exit. I got a green candle at 5, I'm going to exit. I'm looking for my next entry. My next entry, I have a red candle at 6, I'm looking to go short again, right? So at 6, I'm going to go short again. And my next exit, I'm looking at 8, 9 o'clock. So we have, this is opening at 8, it's closing at 9. So I exit that trade. So if I'm looking to get in the market again, I'm looking at 9 to 10. We got a red candle. I can go short. I go short. As you can see, the price continues coming down. My exit, I'm looking at 12 o'clock. So when it's 12 o'clock, I'm out for the day. As you can see, 12 o'clock brings me down here, down here. I'm out of the market and I'm done for the day. Okay. So I'm looking at the session open, session break, session close. I'm looking at the RSI upper extreme and the RSI lower extreme. The upper extreme is overbought, the lower extreme is oversold. Okay, so with me bringing these factors together with wave patterns, it gives me a higher degree of accuracy. Let us see here. What are our other comments? All right, Adi Salim, I hope I answered your question. Grace, L Grace says the RSI setting is too close. Yes, it's too close. A period of 2, close price. 90-70, upper extreme. We have a 50. Yeah, we also put in the 50 line. And we have 30-10 as the lower extreme, which is oversold. And if you're day trading, you're looking at the 1 hour time frame. I find the 1 hour time frame is the best time frame. Okay, so the 1 hour time frame, that's what we're going to use. And I see Grace, not L Grace, but Grace is asking, as a day trader, you trade the smaller waves. As a day trader, we don't necessarily trade the smaller waves. We're trading the wave in the degree that it's made available to us, right? So on the higher time frames, you're going to have bigger waves. On the lower time frames, you're going to have smaller waves, right? But in the degree that you're trading, there's going to be bigger and smaller waves as well. So you're looking for the bigger waves inside of that degree. Okay. Let's see here. Grace. Okay, I just answered that. Adi Salim says, thank you. You're most welcome. El Grace says, okay. Grace says, okay, thank you. Wonderful, wonderful, wonderful. Okay, guys, thank you so much. It's been a pleasure as usual. I will see you guys on our next class. Bye-bye for now. I also see someone with my last name, Brandon Phillips. Hello, Brandon Phillips. Have a good evening. All right, guys. Bye-bye. It was a pleasure having all of you. Good evening. Good evening.